The Morgan Report with David Morgan.
David Morgan with you with the weekly perspective for the week ending 11 October 2019. Well, how the year goes by. And for those that don't know, and many that do, October 1st is the start of the new year for many corporations. It's sort of the corporate new year. In a lot of cases, not all, but a lot of corporations end their books at the end of September and then start their corporate year October 1st. So with all that, let's move into what I like to talk about normally. First off, and that is the stock market, generally speaking, on the U.S. stock market. And on the 11th, stocks soar on an expected partial trade settlement or accord between the United States and China. The industrials were leading in the indexes on Friday. Energy and financials were also up quite well. And the British pound had the biggest gain it had in 2 years on a possible Brexit breakthrough. So lots of stuff happened in the stock market, lots of news driven. And as much as I and others think that the overall equity market is overvalued, and it is, it doesn't mean that it can't stay overbought for a very long time. And it continues to bounce in a trading range where it continues to seek trying to get into this new high territory in a more substantive way. The foreign stocks weren't left out either. The EAFE, which is an ETF, you can look it up. It's EFA, jumped about 2%. The highest level has been in a month. It was led by mostly the big European shares, and the emerging markets also came up over the 200-day moving average. So that's kind of interesting, especially with this Hong Kong situation that the mainstream media and mainstream financial press seems to leave out, especially in the United States. Regardless, you can't fight the tape. Looks like the market's high and possibly going higher. A lot going on in every day, but from the longer term perspective, many of us know that the robotics industry is going to take over many jobs. AI is going to take over many jobs. Self-driving cars, self-driving trucks. Some say it's not going to take place. I'm a firm believer at some point it will. It already is, but not to a huge degree. So there'll be a lot of jobs lost, especially in the trucking industry or transportation industry. So what's going to take the place, or what are humans going to do? And this is an interesting, from International Business Times. In fact, I used to be a regular columnist for them years ago. I stopped doing it some time back, but the entity IBT has really become quite well known and quite well read. But regardless of all that, countries facing the greatest skill shortage. Share of companies affected by skill shortages in selected countries 2018. Japan, 89%. Turkey, 66%. You can see, I don't have to read it all to the United States, 46%, and China, 13%. As rapid globalization and technological change have shaped the world's job market, skill shortages have become a growing problem for employers. The scale of the problem varies hugely between countries, and it is most pronounced in Asia. Japan was the country most severely affected, with 89% of companies familiar with the problem. The country has been at the top of the survey for some consecutive years, and it was one of the first industrialized nations to experience a rapidly aging population and a decline of labor market participation. Having only recently opened up to more immigrants, the country did not fight the problem for many years either. So basically what's happening is skilled workers leaving it, and of course different skill sets needed. There's a combination of things going on, but overall, with a very low immigrant population, there's high skills. It's interesting to me that Japan's really at the top and China's at the bottom. China is certainly a lot to say negative about it. Social credit system, totalitarian government, leader elected forever till death. And lots going on around that with political dissidents disappearing. I mean, I could go on, but facts are facts, and it's interesting that China is running a lot of highly educated people through their system, and they are the lowest here. America is about in the middle of this situation. So let me leave it there and move on. As I stress each week, the overall global economy is contracting, not expanding. these la words about everything is wonderful, at least in the United States, blah, blah. Look at the numbers, look at the facts, and look outside of the U.S. press. This is an interesting one from the M&G Investments, Bond Vigilantes. And here, this is a very interesting graph. I hope you don't have to see it. I mean, this is a podcast as well as a video this week. But these are high yield, which is junk bonds, default by issuer. Looking over on the European side, New Look senior issuer, Raleigh Saw, Galapagos Holdings, and Thomas Cook. Most of them were either bankruptcies or restructuring. Over on the other column here, the United States high yield defaults, PG&E missed a coupon, so certainly that's a concern, but not major as of yet. Windstream Services bankruptcy, Jones Energy bankruptcy, SunGard Avail Services bankruptcy, Cloud Peak Energy bankruptcy, Bristow Group bankruptcy, Energy, Legacy Reserves bankruptcy, Stems Holdings Financial Services bankruptcy, and 3 more energy companies filing bankruptcy, restructuring, or missing a coupon. So I don't want to make this like the whole system or the whole energy sector is falling apart, but a lot of these, especially on the fracking side of the equation, are not making money. It's really not working as well as it's purported to be, and the facts are right in front of us. These junk bonds, you've got to be very, very careful of them and really pay attention to what you're doing on anything that's high yield. There are some utilities and other things that are rather safe to very safe, but energy high yield is something you really want to pay attention to. If you're getting too high yield, you are in a junk bond situation, and it's junk for reason and high yield for reason usually. So buyer beware. Let me move on to the cryptocurrency space for a moment. This is from CNBC. Facebook's Libra cryptocurrency coalition is falling apart as eBay, Visa, MasterCard, and Stripe jump ship. These entities all said really don't want to do anything with Libra right now. They're withdrawing their participation or verbal affiliation that they thought they might come on board and that type of thing. Basically saying thanks, no thanks. Very interesting. We're following the story, and we will continue to do so. Here's an interesting article on the energy part of the equation. Coal demand to plunge to 42-year low. U.S. power plants are expected to consume less coal next year than at any point since President Jimmy Carter was in office. Although Donald Trump's mission to revive America's coal industry is he's tried to boost coal by slashing environmental regulations and installing a former coal lobbyist to lead the EPA, coal keeps losing ground to cleaner and cheaper alternatives. Power companies are rapidly retiring coal-fired power plants and replacing them with dirt-cheap natural gas and increasingly affordable renewable energy. So I think that's an interesting fact that not too many are pointing out. I'm not saying goodbye coal, but obviously the lowest amount to be used projected for next year than in the last 42 years. Well, let's move into gold. Global gold-backed ETFs holdings at record high, news data shows. Global-backed ETFs reached their highest level of all time in the month of September, adding 75.2 tons in September to a total of 2,808 tons, according to new data from the World Gold Council. A lot of ETF gold. There are pros and cons to ETFs. I'm not going to go into it here. Some people won't touch them. Other people only use them. And again, I'll just leave that for another discussion. The point is, regardless if it's paper or not, it's still a move into gold. And by the way, there's been a kind of a shift to what the physical gold market is doing these days with what type of investor is buying. I think I mentioned this in one of the updates not too long ago, but a well-known and close to me personal retail gold person that has a rather substantial gold business did quantify that they probably have their best year ever as far as gold sales are concerned on probably like a tenth of the business in actual participation. So let me state that a little more clearly. Best year ever with about 10% of the normal amount of trading, which means that the average person that's coming in there or entity that's buying is buying a lot more gold in size than in previous years. So previous years have been kind of the little person coming in and buying at a certain level. And then this year so far anyway has been people with substantial means that are coming into the sector, which I think is actually telling of the fact or the idea that these wealthy individuals that basically probably put off holding gold for whatever reason, their business, they're doing good in the market, whatever, decided that they do need some, and they're coming in and they're participating in this safe haven asset. Interesting, and of course, I and many others predicted that this would take place with the blockchain, and that is that you would monetize the metals again, and you'll do it using the blockchain technology. Here we see the Perth Mint to tokenize gold with Infinity Gold on public Ethereum blockchain. Yesterday, Aussie fintech firm Infinity Gold announced that the launch of a digital token backed by gold stored and held at the Perth Mint, one of the largest precious metals refiners. The company said it would issue Perth Mint gold tokens as an ERC20 token over a public Ethereum blockchain. You can read the article. It is written on Ledger Insights. You can type in the search engine, you'll probably be able to find the article. Very interesting. This is, of course, not the only one. There are others that have come out, and there was one recently that failed miserably, by the way, so buyer beware again. And, of course, full disclosure, I am associated with the Load Project, which is a silverback tokenized token that puts silver back into the monetary system using, of course, the blockchain. So a lot happening in this space, and I think will continue to grow. And I'm going to finish off this week with something we see from a person from the United Kingdom, and this is addressed to David Smith. We both have the first name David, so don't get confused. This is to David Smith. Hi, David. I just listened to your presentation at the Money Show in San Francisco. One of the best, if not the best, presentations I've ever listened to. Many, many thanks. Really bring all aspects of gold, but especially my beloved silver, for me, into the perspective. Getting your book on Amazon and forwarded a link to the talk to all my friends and family. An ounce of silver in the UK costs roughly the price of a packet of Benson and Hedges 20 cigarettes. Bizarre. Thanks again for the talk. Best. And I'll leave his initials JB. So I just want to end finally with there's nothing more powerful than the truth. And it's the truth, not your truth or what you believe to be true, but the absolute truth. And there are absolutes in this world and the universe. Not all truth is absolute. We know that. I also want to add on to that this week. Only the truth works. Once you lie and you have to keep defending the lie and massaging the lie and adding to the lie and on and on it goes, it just doesn't work. It eventually ceases to come out other than being what it is. So only the truth works is something to bear in mind. Even these, purported white lies, and certainly I'm as guilty as anybody, and something about how someone looks or whatever. But the point is that only the truth works, and this is important to keep in mind because usually, sooner or later, the truth will out. In other words, it's really hard to lie and maintain a lie because it is a lie. And this, of course, in the political space, goes on both sides. I want to stay neutral here because as far as I'm concerned, the political class is the lowest part of the pyramid, and I've said that many times in my more recent lectures, that it's really a staged A-B, left-right, D-R situation. I mean, basically the outcome is pretty much at the bequest of those higher up the pyramid. And I don't have time to go into that any further, but I've certainly lectured on it many, many times. I may do so on a webinar in, not too distant future. But for now, that's going to wrap it up. I am back from my trip. I will be here for the rest of this month. I will not be attending the Silver Summit for the first time since the inception. In fact, it was myself and Ray D'Amato, Sterling Mining, that came up with the idea of holding a Silver Summit. So he and I hosted the first one, and I don't know how long it's been, but many, many years. And I will be at the New Orleans conference, so if you're interested in knowing where I'm at for the next speaking engagement, it will not be San Francisco for the Silver Summit. David Smith will be speaking there, and I just read you how well he is received, at least by a UK participant at the Money Show. And I will be at the New Orleans Gold Conference on the 4th of November, which is the last day, and I will be the last speaker on the last day. And after that, I forget, I think I'm somewhere in London later in the month. So that'll wrap it up. I'll be with you next week. Hello, I'm David Morgan, publisher of The Morgan Report, and as some of you may already know, The Morgan Report is about money, metals, and mining. In fact, we cover all resources, from rare earth elements to precious metals. I've been publishing on the internet for about 20 years. My primary passion is to help people build and preserve their wealth. I love to make people millionaires. I've helped thousands of people via our research in The Morgan Report, which has thousands of paid members and 10 times that amount on our free weekly updates. Here's what you'll receive from our free newsletter. To-the-point webinars, weekly analysis of the financial markets, interviews and our conference schedule, special reports such as riches and resources, and various metals price forecasts. Our paid service client base is primarily small to medium-sized business owners, professionals in the industry, or the seasoned investor who understands markets and the value of precious metals. My area of expertise includes equity analysis throughout the resource sector, energy metals, base metals. We cover startups to billion-dollar corporations. We focus on a special sector that makes money regardless of price oscillations, and the importance of precious metals due to the ongoing currency devaluations. Our team of 3 analysts and support staff can help you build and protect your wealth. It's important for you to know what other people have said. We're passionate about what we do. High integrity and trust. Tell the truth and own it. If we're wrong, we admit it. Take a long-term outlook with major assets, and bet a little to win a lot with speculative situations. If you choose to become a client, you will gain financial insights very few, even professionals, recognize. You'll understand the importance of honesty in our financial system. You will understand how the money system influences almost everything in your life. You'll be prepared for the ongoing currency crisis. And finally, I've chosen to make my life's mission greater than the individual, which means my mission statement is to teach and empower people to understand the benefits of an honest monetary and financial system. It's been a great journey so far, and the best gains in this sector lie ahead over the next 3 to 5 years. I'm fortunate to have earned the status of being a leading authority in my field in helping others protect their wealth. You can email me at support@themorganreport.com or call my office at 480-325-0230.